Howdy, partner. Town Sheriff here, laying down the law on the 15-minute frontier of E-mini S&P 500 futures. In these parts, it's best to be ready for opportunity and keep your stops planted firm. Here's the rundown. Let's jump right into it. Key buy and sell levels, or ranges. Value area high, VAH, 7,689, the ridge above town. Buyers need acceptance above here before they can ride toward the session highs. Value area low, VAL, 7,684, the saloon floor. Losing it cleanly gives sellers room to push toward the lower end of the range. Point of control, POC, 7,687, the busiest trading post in the 5-hour auction. Current price, 7,686, almost directly on POC after the sharp 7:30 Eastern Time sell-off. EMA/VWAP, 7,686 ha/7,684. Price is sitting on the EMA with VWAP providing the next support layer. Primary buy zone, 7,683 to 7,684. VAL/VWAP confluence. Secondary buy zone, 7,681 to 7,682. 5-hour low and last major defensive outpost. Sell/resistance zone, 7,689 to 7,691. VAH plus repeated intraday highs. Major resistance, 7,695. 5-hour high and the toughest ridge for buyers to capture. Market context. ES has spent most of the 5-hour window rotating between 7,681 and 7,695, with value tightly concentrated around 7,684 to 7,689. Price briefly pushed towards 7,695 at 7:15 Eastern Time, but failed to hold the advance, dropping back to 7,686 by 7:30. The profile itself is balanced, but order flow tells a less friendly campfire story. Sellers have repeatedly absorbed rallies above 7,689. Holding 7,684 keeps the auction rotational. Losing it shifts the advantage toward the bears. Volume analysis. Cumulative volume delta, CVD. Breakdown. 3 a.m. Eastern Time, CVD, minus 3,339 contracts. CVD high at 4:30 a.m. Eastern Time, minus 812,730 a.m. Eastern Time. CVD, minus 10,763. Buying volume, 15,718 contracts. Selling volume, 26,481 contracts. Sell/buy ratio, approximately 2-to-1. From the 4:30 CVD peak to 7:30, delta deteriorated approximately 9,951 contracts, while price remained relatively resilient around value. Interpretation: this is bearish divergence beneath the surface. The cattle are still standing, but somebody has been quietly stealing the horses. A break below 7,684 could release the accumulated selling pressure quickly. Risk management considerations. Long trades. Entry: 7,683 to 7,684 only if support holds and CVD stabilizes. Stop loss: 7,679. Targets: 7,687, 7,689, then 7,695. Short trades. Entry: 7,689 to 7,691. On rejection, especially with continued negative CVD, stop loss: 7,695. Targets: 7,687, 7,684, then 7,681. A TR is approximately 5 points, so extremely tight stops risk getting bucked off by ordinary ES noise. Potential scenarios and trade setups. Scenario A, VAH breakout. Acceptance above 7,689 to 7,690 changes the posse in control. Setup, long above 7,690 after successful retest. Stop, 7,686. Targets, 7,695, then 7,700. Scenario B, VAH. Rejection pricing revisits 7,689 to 7,691 while CVD stays weak. Setup, short the rejection. Stop, 7,695. Targets, 7,687, then 7,684. Scenario C, VAL breakdown. Sellers kick open the saloon doors below 7,684. Setup, short, below 7,683 after failed reclaim. Stop, 7,688. Targets, 7,681, then 7,677. Scenario D, VAL/VW. AP bounce. Buyers defend 7,683 to 7,684, and CVD begins recovering. Setup, long 7,684. Stop, 7,679. Targets, 7,687, 7,689, then 7,695. Current tactical bias, neutral to bearish, below 7,689, bearish below 7,684, bullish only with sustained acceptance above 7,690. Smash the like and subscribe button. Click the bell to receive content notifications. Remember, the future belongs to the focused. Stay disciplined, stay curious, and as always, trade smart, trade strong, and never stop leveling up. I'll see you in the markets.